Hi there, and welcome to this on-demand financial education workshop, How to Buy or Sell a Home in a Hot Market, presented by Canopy Credit Union. So just to jump right in, a brief introduction, since you obviously can't see me, but you're hearing from me. My name is Jon Maroni. I am one of our certified financial coaches and our financial education officer at Canopy Credit Union. A little bit about my background and why I love talking to people about money and why I love talking to people about real estate. I worked as a financial blogger from 2014 to 2017, writing on all sorts of different topics, real estate being a big chunk of that. I also continue to do freelance financial writing on lots of different topics, especially in the real estate realm. And then my personal financial goal, I always like to share this because you should always ask, okay, what are some of the aspirations and goals for someone I'm taking financial advice from? I am hoping to retire by 40. I'm 33 as I write this right now, and owning rental properties and real estate especially has been a key part of my retirement strategy. And then if you do want to out to me and connect with me personally, I'll put all my contact information up there with that nice photo of yours truly. You can reach me by email or phone. I'd be happy to talk with you about anything that we cover today. Speaking of which, what are we going to talk about? So the title of this workshop is How to Buy or Sell a Home in a Hot Market. And these are some of the specifics that we're going to jump into. We'll talk about renting versus owning. Is one better? Is one worse? And hopefully we'll dispel some myths in that area. We'll talk about the 4 C's of home buying. This is going to be in particular, what does a lender look at when they're considering you for a mortgage? We'll give you a pretty basic calculation that you can use to come up with how much home can I afford, which is something that a lot of people have questions about. We're going to talk through in detail the different types of mortgage programs and types that are available. So as you begin to shop for a mortgage and shop for a house, you know what your options are and you can make a really good decision. We'll walk through the purchase transaction from start to finish, all the way from getting pre-approved to closing on the house and getting your keys. We'll talk about the climate of the current real estate market here in Spokane locally. So as of the recording of this video, many of you have probably heard that it's a hot market. We're going to dive into what does that mean and how does that impact whether you're buying or selling a home. And then finally, working with a real estate agent, how to screen a realtor, and then how to navigate that hot market. I think you probably heard from people around you that it is a very hot market in Spokane. I don't have any information that is to the contrary on that, but we want to talk through how can we navigate that market? How can we still protect ourselves and try to get the best deal possible, whether we're buying or selling a piece of property? So real quick on renting versus owning, some of the advantages and the considerations or the disadvantages. And one of the reasons I love having this conversation with people, especially when they're renting, is there can be a natural assumption that owning is the best. It's the best way to go. And if you are renting, you're throwing money away. I'm here to say that that isn't always the case. So real quick, let's look at this chart. Some of the advantages of renting. You have little to no responsibility for maintenance. It's easier to move. You have flexibility. If the hot water heater goes out in your apartment, you call up your landlord and it's their responsibility to fix it. Some of the disadvantages of renting, you don't get any tax benefits for paying rent. Your rental payment isn't going towards purchasing equity in that property. There's the possibility of eviction depending upon what happens with it. But keep in mind that there is quite a bit of flexibility when it comes to renting. And you can move, as long as your lease is up, you have options that are available to you. And then some of the advantages of owning a home, you do have the opportunity to build equity. Not everyone enjoys home appreciation. Again, we've seen pretty good home appreciation here in Spokane during the last 4 to 5 years, but in other periods of time, that hasn't been the case. Homeowners would have told you a completely different story. There's a sense of stability. You can change your space. You're in control of it. There's independence, right? If you want to paint the walls in your house, you can paint them whatever color you want, whereas when you're renting, you don't always have that much flexibility. But there are some considerations about buying. Again, when you need a new roof, need a new water heater, there's no landlord to call when you're the owner. You're the landlord. You're the owner. It's going to be your responsibility. You'll always be paying property taxes, even once you've paid off the mortgage for that property. And you have generally less mobility and freedom. Anyone who has tried to sell a home and move into a new home can speak to this, that trying to juggle multiple mortgage payments at once, again, you are less mobile when you're a homeowner. And the reason that this conversation is really important is because many people will ask me, Jon, when is the right time to buy a house? Is now the right time? Am I going to miss the right time? I'm here to alleviate some of your concerns that really the right time to buy is when you are truly ready to buy. That means ready in terms of you want to buy, you feel like you have the cash available to do it, and you're timing the market in such a way that makes you feel comfortable with the potential risks that you're taking. What I would ask you is just to consider when everybody whenever somebody says to you, hey, if you don't buy now, you're going to be missing out. Dig a little bit deeper. What do they mean by that? And if you ever feel yourself being anxious or nervous or like, I need to buy now because I'm going to miss something, just dive into the emotions that you're feeling in that time. Because again, the right time to buy is when you are ready. And you never want to buy a house when you don't feel like you're fully ready for that purchase and for that transaction. So let's dive a little bit into the mortgage world. We call these the 4 C's of home buying. Now, when I was a real estate loan officer, these are the things that we would evaluate people on when they were looking at getting a mortgage with us. So the first would be cash. What do you have in terms of a down payment amount? What do you have in terms of other reserves? Because a key component of this process is not just, okay, do you have the money to satisfy your down payment requirement, but do you also have money to maintain this house? Do you have reserves after the transaction is completed? Because owning a home has some costs. We'll talk about the cost of maintenance in a little bit further on, but it isn't just the cash that's needed for that down payment for the purchase itself, but additional cash to be able to access for future repairs, maintenance, and to be able to maintain the house. We're really going to be taking a close look at your credit. Again, answering that question, what does your credit history say about you as a borrower? So again, the higher the credit score, the better of an interest rate you're going to get on a potential mortgage. But also there are other things in there that will come into consideration, right? Are there any bankruptcies, foreclosures, obviously? Do you have any late payments? We want our credit report and our credit score to tell a great story about who we are as a borrower so that when it comes time to get a mortgage, we're going to get the most advantageous terms for ourselves. Now, one of the things I should say is I also function as a financial coach. So if you need help in that area of how do I improve my credit score? How do I clean up my credit report? How do I dispute items? Be happy to walk through that with you. So please reach out to me personally if you'd like to talk through your unique situation in that regard. The next C would be the collateral. What type of real estate are you buying? What is it worth? What are you paying for it? This is where appraisals and inspections, things like that can be so vital. If you're offering on a home and you've offered $300,000, but it only appraises at $285,000, that difference is usually going to have to be paid by you as the buyer, or you might have to work with the seller to negotiate the price down. So the collateral that you're purchasing is a key thing. For the most part, when it comes to the idea of like multifamily units, generally anything that has 4 units or less is going to be considered a primary residence. So you're not going to have to do anything on the commercial side. But if you're looking at buying something that has 5 units or more within it, maybe a octoplex or something like that, that's going to be a different type of mortgage product. And so you're going to need to maybe work sometimes with a commercial real estate agent and a commercial mortgage lender in order to get access to that. But for most people, if you're purchasing a single family home, it's going to be about the condition and that appraisal coming in at where you need it to when you're accessing a mortgage. And then the final C, your capacity to pay. Loan officers are evaluating you on, can you afford your new mortgage? What does your income look like? What does your employment history look like? One of the things that we're going to talk about is when you're getting ready to access a mortgage and purchase a house, you don't want to be moving in and out of different jobs, even if they're in the same field. You want things to kind of maintain and stay the same. And then also you're going to be evaluated on what other debt payments do you have? What does that debt to income ratio look like for you? Because obviously taking on a hefty new payment in the form of a mortgage can represent risk if you have a lot of other debt already out there. So again, these are the things that a mortgage loan officer is going to evaluate you on when they're looking at you as a potential person to access a mortgage, to be a buyer. So how much home can I afford? This is a question that a lot of people are wondering about. And so this is a really simple calculation that you can do in order to figure out, okay, what is a reasonable mortgage payment for me? So the first thing you do is you calculate your household pre-tax monthly income. So household meaning for anyone who's going to be on that mortgage, what is their pre-tax monthly income? So one of the things you should understand is that most lenders are going to be looking at your pre-tax, not your post-tax income. So again, add that up, figure out what that is. Multiply that amount by 45%, and then subtract your other monthly debt payments from that. And that bottom line that you come up with is the all-in house payment that you can afford comfortably, including taxes, insurance, and HOA fees, things like that. So the reason I emphasize comfortably is because while you could go with a payment that's above that amount, really this is going to keep it reasonable and keep it affordable for you as you deal with other potential financial situations that come up in the future. So let's look at an example of doing that calculation for yourself. So working with a household that their pre-tax monthly income is $5,000 a month. If we multiply that by 45% or 0.45 when you're doing it on your calculator, And then if let's say that in this theoretical scenario, this household has $450 of other monthly debt payments out there. So the maximum affordable mortgage payment for their household will be $1,800. Again, that's what they can afford. Now, there's ways that you can make that monthly mortgage payment go down. Obviously, if you buy something that's a little bit more affordable, or if you are able to put a more significant down payment. Again, this is what we're looking at on the mortgage side. But again, a real quick and easy way that you can figure out, okay, how much home can I reasonably afford? So now let's talk about mortgage products, mortgage types that are out there. So in terms of the types, there are two different rate structures for mortgages that are important to discuss. The most common one that people think about is the fixed rate mortgage. That means your monthly principal and interest stays the same for the life of that loan. You know what that payment's going to be. It's always going to be the same every single month for the life of that mortgage. And this is by far the most popular mortgage type in terms of rate that people get into. And it makes sense. We like the stability of that. We like the understanding that, okay, every single month, no matter what happens, this is what my payment's going to be. However, there can be instances where an adjustable rate mortgage or an ARM may be a better option for you. So an adjustable rate mortgage normally is going to have a lower initial interest rate than a fixed rate mortgage would. Maybe it's going to be fixed for, the adjustable rate, it's going to be fixed for the first 5 years and then it adjusts every 5 years after that. But because it has the possibility to adjust, often it starts at a lower rate than a fixed rate mortgage. And they can be a good option if you know you're not going to be in your house long term. So say maybe you only anticipate being in your home for 3 to 5 years. You might access an adjustable rate mortgage to take advantage of that lower rate for the time you're in your home. And then if you plan to sell it, again, you'll have taken advantage of a lower rate for the time that you're in the house. And it sometimes can help you qualify for a more expensive home because if that interest rate is lower, our payment's also going to be lower. So again, there are some unique circumstances. I would say probably 90 to 95% of people are going to be best served by accessing a fixed rate mortgage. But want to make sure that you know that those adjustable rate mortgages are out there and that sometimes they can be a good option for you. Now let's talk about the mortgage programs. I think a lot of people have questions about these. So we'll start out with the ones that most people think about, those government insured mortgages. These are mortgages that insure a lender against potential losses. And so these are the different types that are out there. So the first one, and that most people think about, is the FHA, or the Federal Housing Authority program. Now, some people think FHA stands for First Time Homebuyer Assistance Program. That's not actually the case. This offers you the option to buy a house with a down payment sometimes as low as 3.5% of the purchase price. So that's why it can be really appealing. It also has more flexible requirements in terms of a minimum credit score to access it. So right now for the FHA, you have to have a credit score that is at 580 or higher. But for a lot of conventional mortgages, which we'll talk about, the minimum credit score requirement can be quite a bit higher than that. So if you're worried about where your credit score is at, or if you don't have a significant or robust down payment, this can be a good option for you. Now, some things to keep in mind about the FHA program. So the first one, and I put it up here, is that you will have to pay private mortgage insurance for that mortgage as long as you have it. So for a conventional loan, if you put less than 20% down on that purchase price, you will have to pay private mortgage insurance up until you own 20% of that home. But for FHA loans, that's in place for the life of the loan until you either pay it off or you refinance. So that's something to keep in mind. And that private mortgage insurance can generally be around 1% of the total loan amount broken down monthly for the life of the loan. So for instance, if you got a mortgage for $100,000, you're going to pay about $1,000 each year in private mortgage insurance. So that'd be, sliced up into 12 monthly payments added on to your mortgage. So something to keep in mind in regard to that. But again, can be really appealing if you're worried about your credit score or if you're worried about not coming up with a very significant down payment. The USDA, or U.S. Department of Agriculture program, is for rural borrowers who meet certain income requirements. So this is a program they have out there to specifically develop rural areas. But here in Spokane, our local market, you sometimes don't have to go that far out in order for a piece of property or a property that has a home on it in order to be able to qualify for this program. So again, it can be a good option because you can have a no down payment and there isn't private mortgage insurance in place. So again, this can be a really, really nice program if you're thinking you're going to be living a little ways out of town. And then the VA, or Veterans Affairs Program. This is for qualified service members. It offers 100% financing with no PMI requirements. So if you are a veteran, want to talk with a mortgage real estate loan officer to see if you qualify for this. Now, one thing that I should point out about these government programs is that they do have some restrictions and requirements that sometimes when you're buying a house can make you a little bit less attractive to a seller. The main one is that because these are government insured mortgages, they do have certain property condition requirements that other mortgage programs won't. So for instance, let's say you have an FHA mortgage and you're going up against, in an offer situation against someone who has a conventional mortgage, and you've offered the same amount. The seller might be more motivated to go with the person with the conventional mortgage because there's no property inspection requirement. So again, that's just something to keep in mind. It doesn't mean that the programs are bad in any sense of the word. They've helped a lot of people get into homes, but know that that's an additional hoop that that someone may have to jump through that can sometimes make you a little bit weaker from a seller's perspective if you're the borrower. And so the next subset of mortgages would be conventional loans. Those are offered by, lots of your banks, your credit unions, your online lenders. These are not insured or guaranteed by the federal government. So they have sometimes a little bit less stringent requirements on the property condition, but they will often have more stringent requirements on where your credit score is at, where your down payment is at. But there are some conventional mortgage programs that offer flexibility in that down payment assistance area, and we'll talk about that. And then finally, portfolio loans. So these are mortgages that are originated, funded, and serviced completely by a local financial institution. Now, what that can mean sometimes for you as the borrower is sometimes on a portfolio loan, the place offering the mortgage can be really flexible because they're going to keep it in-house. Again, they're not going to sell that to investors. It's not going to change hands. It's going to be kept solely with them. So sometimes they can be a little bit more flexible with that. And so let's talk about, there are down payment assistance programs that exist out there. So there are state-run programs, and here in Washington State, those go through the Washington State Housing and Finance Commission. I've included the website where you can get access to those. And then some local institutions have grant programs for down payment assistance and things like that. So it's always worth having a conversation with your loan officer and asking, hey, so this place where I'm looking at accessing my mortgage, do you guys have any down payment assistance programs that might be able to help me get some help with that down payment? And sometimes it can be available for rural areas or certain neighborhoods, or they have certain requirements for that. But it's always a conversation and a question that's worth asking, especially if you need some help with that down payment. Okay, so the mortgage process, what does that look like? So the first thing that I always say to people is you want to get pre-approved before you even start shopping and looking for houses. There used to be an era where you could just have a pre-qualification letter and that would suffice. You could make an offer and then kind of make up some of the things that you hadn't gone through later. With how hot our local market is, you need to be pre-approved and you want to be as far along in the mortgage process as possible. I would say even before you begin writing offers on houses, because in Spokane, certain houses are receiving multiple offers, sometimes all cash offers. So you want to make sure that you are as far along in the process as possible before you even start shopping for houses. So some things that you'll need, loan officer is going to need your income verification for 2 years. That's often going to be your W-2s, your tax returns, confirmation of any alimony or child support, and detailed information about your current expenses and your assets. So that can include things like retirement accounts, what cash savings do you have, explanations for any negative items on your credit report. So if you have something on there that's a concern, make sure that you've come up with an explanation for what were the circumstances that surrounding that, how did it happen? Because you're definitely going to get asked questions about that. One thing to note here on the assets front, say for instance, maybe you're in a situation where your parents are going to be gifting you funds for a down payment, or someone else is giving you money to help with that process. Make sure that money is in your accounts for at least 90 days before you start that mortgage process. The reason for that is that loan officers want to see that any money you have available to you is seasoned, because they're worried about maybe you went out and got a personal loan to get help with that down payment and it's not yet shown up on your credit report. So again, we want to let any new income, any new money that's coming our way, season in our accounts for at least 90 days before we start that process. So the whole mortgage process, it takes some time, about 30 to 45 days during the normal season. When it's busy, which some of you may be running into loan officers who are really busy right now, it can take more time just because of the legwork that goes into processing these loans. So speaking of our local market, let's talk a little bit about what that looks like. So again, we're in March right now, so I've pulled up for you, this is the February Spokane Association of Realtors report, and it's really valuable information. You can see there at the bottom of the screen where this comes from. They update it on a monthly basis. It's showing that sales have held steady. And this is closed sales of single family homes. You can see the average price is up 11.4% for February 2020 compared to February 2019. So that means that average closed sales price for a home has gone up by 11, almost 12%. So we're seeing home prices continue to increase year over year. That medium price being up as well. The inventory is down, and I don't think anyone would be surprised by that. Right now, we only have a 1.1 month supply of inventory. Now, a healthy market, as you can see there on the left, has about 6 months of inventory. And let's talk about what this means, particularly if you are a buyer. Right now, it is challenging to be a buyer. When we have 1 month to up to 5 months of inventory, that is a seller's market. That means sellers are in control. Multiple buyers for each property, sometimes multiple offers. Sellers can really pick and choose who they want to sell their home to, so it can be challenging to be a buyer in this situation. A buyer's market is when there is 7 to 12 months plus of inventory. That means sellers, there aren't as many buyers as there are sellers. There's lots of inventory. It's a simple supply and demand calculation. So right now, we are about as far in the seller's market as you could possibly be. So that means as a buyer, you have to really navigate this market with real intentionality, because there are a lot of people out there that are purchasing homes, especially at that starter level home price, which here in Spokane, if you're in the $200,000 or less range, that's very, very hot. As those prices go up in terms of purchase price, there aren't quite as many buyers, but especially if you're in the market for a starter home, it's a very challenging season to buy right now. So you want to make sure you're working with an experienced realtor and that you know what the lay of the land is before you go out shopping. So let's talk about that. How can you navigate a hot real estate market? One of the best things you can do is do your research ahead of time and be ready to offer on homes that you check out. Keep in mind that making an offer on a house is really just the start of the process. It doesn't mean that you've signed on the dotted line and that you're locked into buying that house. But you want to be ready to move quickly on houses that you are genuinely interested in. So do your research and be ready to offer. I'm encouraging people to avoid asking for seller's concessions, such as the seller paying your closing costs for the buyer, because there are going to be offers out there that aren't requiring or asking for that. So we want to try to stand out a little bit if we can. Make sure that your realtor, and I will pause on this to say, I'm a big fan of people working with realtors. They're excellent professionals to help you navigate this process. Make sure that everything is in order, that you're getting the best possible deal. I think that a good realtor is worth their weight in gold in a real estate transaction. If you are working in a for sale by owner type of situation, or you're looking to sell your home yourself, you at least need to enlist the services of a good real estate attorney to help you navigate that, because there's so much paperwork that goes into a real estate transaction. You want to make sure that everything is in order so that you protect yourself if any potential negative situations come up. So make sure that your realtor is equipped with everything they need to submit offers. So pre-approval, especially so that they can make offers on weekends, or if you're working with a loan officer that keeps Saturday and Sunday hours, that they can generate that letter for you when needed. Just make sure they have everything that they need, so when you see a house, you're ready to make an offer on it. And remember that the more cash you have as a buyer, the stronger of a buyer you are. Because again, if a seller sees, okay, this person gave a really significant earnest money deposit, they have quite a bit of money of cash to put down, they know that whoever's offering them that mortgage, there probably aren't going to be issues that come up. Quite a few real estate transactions fall through from the point that an offer is accepted to before closing, more than you might think. So again, the more cash that you can have available, the more you're going to stand out as a buyer. And start with a strong offer, especially on any house that you're really interested in. I referenced earlier, remember that an offer is really just the start of the conversation. It's not the end of the conversation. Some homes in Spokane are receiving offers before they are listed, or within the first few days of their listing, or before an open house happens. So you just want to be ready to move quickly and put your best foot forward when you're making an offer. Try to have the perspective of the seller in mind. Think about what they would be wanting to see in a potential buyer. And it's kind of a cheesy thing, but I've seen it work for quite a few people. Write a personal letter to the seller. It sounds cheesy, but it can really work. I have a friend who owns a real estate agency here in Spokane, and he was helping a potential buyer buy a duplex here in our area. And they had written a letter to the sellers saying, hey, we are a local family. We want to rent this to local families. We're not from California or from an outside area. We intend to keep this local and support our community with affordable housing. And even though this buyer did not have the strongest offer in terms of the purchase price, they ended up getting the house because they were able to make that personal connection with the seller. So those things can make a real difference. So I would recommend any house that you make an offer on, write a personal letter to the seller, have the realtor share it with them. It can make a real difference sometimes. Now let's talk about how to choose a realtor. Again, I am assuming that you're working with a realtor. I think that this is the right way to go. But vet your realtor. Right now here in our area, we have thousands of realtors, but some of them are pretty inexperienced. Some of them haven't even done a single transaction. So you want to interview your realtor. You wouldn't want to be working with a doctor and having surgery if you were the first person they were operating on. So again, why would you do that with a significant financial purchase, one of the most significant ones you're going to make in buying a house? So some questions that you can ask a realtor. How long have you been in the business? Gives you an idea of their experience level. An experienced realtor is going to help you save money on the purchase side of things and make more money when you're selling your home. What's your strategy to help me find a home? Again, how do you do things differently? Ask if you can get a few references. You want to hear from some people who've worked with this person from start to finish on a real estate transaction. And then ask them, what do you think separates you from your competition? Again, these good realtors, these people who are really experienced, they're going to have good, solid answers to all of these questions. And it's worth taking a little bit of time to screen someone. Now let's talk about the 10 commandments of buying a house. So these are things that you want to do, or in this case, not do when you are looking to buy a house. The first is, thou shalt not change jobs, become self-employed, or quit your job. Again, a real estate loan officer or mortgage loan officer wants to see that there's been really good consistency in your income and employment situation as you're getting ready to buy a house. So don't change jobs. Thou shalt not buy a car, truck, or van, or you may be living it, just sprinkling in a little bit of humor there. We don't want to be doing anything with our credit as we're leading up to a home purchase, which leads into number 3. Thou shalt not use charge cards or credit cards excessively or let your accounts fall behind. You want to stay on top of everything. We don't want anything negative to show up on our credit report or our credit score. Thou shalt not spend money you have set aside for closing. Any money that you have for that purchase process needs to be left for that. Don't tap those funds. That would be a big, big no-no to tap those things. Thou shalt not omit debts or liabilities from your loan application. Again, every debt or liability that you have needs to be listed in there. Thou shalt not buy furniture. And this should say thou shalt not buy furniture on credit. Again, we don't want to have any new credit accounts show up on our credit report as we're getting ready to close on a house. Thou shalt not originate any inquiries into your credit. Don't have any hard credit pulls on your credit. Thou shalt not make large deposits without first checking with your loan officer. This is talking about that seasoning piece. You don't want any new deposits to show up in your account, especially if it's something outside of like your normal paycheck amounts or anything like that, because that's going to raise a red flag for a mortgage lender. Thou shalt not change bank accounts. This is something that you don't want to do as you're getting ready to buy a house. And then thou shalt not co-sign a loan for anyone. Again, harkens back to that. Don't do anything unusual or out of the ordinary with your credit as you're getting ready to purchase that house. We want it to be smooth sailing the whole time. Okay, so once your offer is accepted, this is kind of what the process looks like. So next step in the process will be the purchase and sale agreement, the contract. And then we'll move into the inspection phase. Now, some people will tell you that it can be a good idea to stand out as a buyer, to waive that inspection. I would personally recommend that you always have the inspection clause in there. You want to know if there are items or issues that come up. And I think that's a key way that you can protect yourself as a buyer, is to always ask for an inspection. If a property ends up selling because somebody made an offer that doesn't have the inspection clause, that's okay. It's probably not the right property for you. And then if any items come up in the inspection, sometimes you might work back and forth with the seller to say, hey, we think there are some big issues that need to be repaired before we're comfortable moving forward, or we want you to drop that price a little bit. Lender requirements are going to come into place. What is your mortgage loan officer going to need? Title issues. So you're working with a title company to find out if there are any liens against the property or anything like that. You then move towards closing that transaction and moving in and getting your keys. So this is just kind of the flow of the process on the realtor side of things from start to finish. Okay, so let's talk about selling a home, the 3 P's of selling a home. So right now in Spokane, you're in a pretty good situation if you're looking to sell your home. So the first one would be preparation. So this is going to be preparing your house for sale. This might include any improvements that you want to make that are going to maximize your dollars. When it comes to home renovations and improvements that help you sell a home, kitchens and bathrooms help sell homes. So if you're looking to put money towards something, that is the best possible place to put any extra money that you have. This is also going to include preparation. I would also include staging in this area, in this section. So if you're living in your home, you really want to declutter it. You want to remove personal items such as photographs or your books, and really, really make the space feel open, fresh, and not overwhelming. If you are not living in the house that you're looking to sell, staging the home can be a very worthwhile investment. Homes that are staged sell for a fair amount more than homes that are not staged. But if you're living in a house, make sure that you clean it. Make sure that you are keeping things neat and tidy, because again, people want to envision themselves in that house. The pricing, this is a key component when you're selling your house. Finding that sweet spot where you are not overpricing so that people will opt out of seeing it, but that people will see it. Because sometimes you might be able to get yourself into a bidding war situation as a seller, which can work really well for you. But if that price is too high out of the gate, that can be hard to generate that level of interest. And then promotion. This is where you're working with your realtor, your listing agent, to say, okay, what are some creative and unusual ways that we can come up to list our property? Now, obviously, you want it on Zillow, you want it on all of those sites, but what are the unusual and additional things that you can do? And a good realtor is going to walk you through what those can look like. Because even though we're in a seller's market, you still need to market your home in an effective way to get that maximum dollar offer when it comes in. So we're kind of transitioning to the end here. We've covered a lot of different ground. So how can we help you here at Canopy Credit Union? So if you need a mortgage or need help navigating the process, we have a lot of seasoned and well-experienced loan officers ready and available to help you. These are go on to our website, www.canopycu.com/home loans. This is where we have all the information about our home loan process, including our home buyer's guide, which has a lot of good resources. You can always reach out to us via phone as well. Reach out to me personally. And if you need a recommendation for a realtor, we work with quite a few experienced realtors who can help you navigate this process. Don't be overwhelmed. You've got this, and we want to be your advocate throughout the entire process to help you find that dream home or sell your home. So again, reach out to us if you need anything. Thank you so much for tuning in, and we'll catch you for the next one.